All right, good afternoon, everybody, and happy Sunday. It is August 21st, actually, 2022. Hopefully everybody had a fantastic weekend, but it is now time to get back to reality, back to work. Obviously, tomorrow is August 22nd, a Monday. Hope everybody had a good weekend. But tonight is our weekly Markets A Look Ahead stream, where we will talk about all of the major events coming up in the week ahead on Wall Street, including corporate earnings, including Federal Reserve talk, and key economic data points that we are going to be getting through the week ahead. So a lot to cover, a lot to talk about tonight. We are probably going to be streaming for about an hour and a half. I do have to get an earlier bus so I can be up and ready to get to work on time. But in summary, everybody, we're going to be covering Palo Alto's earnings, obviously a major cybersecurity company in which we've been talking about on the streams for quite some time. They do report after the bell on Monday, as well as Zoom, ticker symbol ZM. So we'll be doing a deep dive into those two particular companies' earnings reports as well. Tuesday, we are going to get a slew of earnings from Advanced Auto Parts, Bank of Nova Scotia, and Toll Brothers. So Toll Brothers is probably the number one company that we want to focus in on here. So Tuesday we are going to have an in-depth stream covering the soup to nuts of everything that was said and talked about on Toll Brothers' earnings report. And I think the reason why we should do that is because I think two things are really going to be in focus here. Number one, prices, and number two, cancellations. So we did hear from the National Association of Home Builders last week, which we covered, and they actually said that they're reporting about 20% of all new home builders either lowered their prices in Q2 to do one of two things, to drive new additional sales, and number two, to avoid cancellations of homes that are already in contract. So I think it's going to be very, very important to focus in on Toll Brothers' earnings report. On Tuesday, we are going to get some comments from the CEO to see if demand is strong, if demand is tapering off, is interest rates affecting the particular market. Now, Toll Brothers, I just do want to set the precedent here that they tend to service a higher net worth individual clientele. I would say anywhere from the upper middle class to probably the upper class, so we'll talk about that Tuesday. Wednesday, we're hearing from the Census Bureau as they release their durable goods report. But Thursday is probably the most important day because what do we talk about all the time on the stream here is that the Federal Reserve is the number one driver of this market. And on Thursday, August 25th, the Federal Reserve Bank of Kansas City hosts its 3-day 2022 Economic Policy Symposium in Jackson Hole, Wyoming. So, quote unquote, reassessing constraints of the economy and policy will be the theme of this year's confab. So again, I'll read that. The theme for this year's symposium at Jackson Hole will be reassessing constraints on the economy and policy. Now, Friday, to cap off the week, we will be hearing from Fed Chair Jerome Powell himself as he kicks off the keynote speech in Jackson Hole Friday morning. Now, I will say there may be a possibility where I live stream that particular event so we can all make comments and take notes in real time, but that is to be determined, so just keep that on your calendars as the week progresses. But Friday we will be hearing from Fed Chair Jerome Powell himself as he speaks at Jackson Hole. We'll do a deep dive in earnings, we'll get everything done, but first, everybody, let's say hello to everybody in the chat, and let's get started. Brian is here, says happy Sunday. Hey Brian, good to see you. Sweet Country Living is here, says beautiful evening. Welcome, welcome. Sally is here. I see Brian, Tyree, study and working with me, says hey, good to see you. Sanjib says, hey Tom, how are you? I'm doing very well, Sanjib, hopefully you're well. ABX Girl is here, War Walker. Studying work with me, says New York is better than Miami. Daryl is here, says, hey Tom, good evening from Chicago, Illinois. Dr. House is here. NG says, hello Tom and friends. GX72 says, well, hello. EBITDA is here, says, hey Tom, I hope you had a nice weekend. Glad I'm finally able to catch another one of your streams. Yeah, so EBITDA, it's going to be a very, very busy week, action-packed week on Wall Street. We have tons of earnings, we have housing data coming out, and the Federal Reserve's meeting kicks off in Jackson Hole. So going to be very interesting to see how all of that plays out. You know what, before we start, everybody, let's actually take a quick look at futures. I totally forgot to do that. Let me just pull up TradingView here. A minute. So if we look at ticker symbol ES, which is the E-mini futures contract to the S&P 500, futures are in the red, about 21 points on the S&P. If we go to the Dow Jones Industrial Average, ticker symbol YM, that is down about 162 points. And to round everything off with the NASDAQ 100, ticker symbol NQ, we're down about 80 points. You know, if you guys want to pull up tradingview.com yourself, what I would advise you to do is pull up the 200-day moving averages across all the major indices and notice where we're running into resistance here. It seems as if price has rallied off the lows and we're meeting some resistance here at the 200-day moving average. So here's what I would like to see, and I think this would actually be pretty healthy, so I'm not calling Armageddon here. If price retraces back to the 50-day moving average, so looking at the NASDAQ 100, that would probably be about 12,400, sort of find a floor and then move higher. I think that would be normal correction territory. So just wanted to make a note of that. Let me put away my laptop here and we will get cruising, everybody. Man, was it a crazy hot day in Miami. Sun was out, obviously, humidity was cranking. But now the sun is down and it is absolutely beautiful. Very, very low humidity. And we will start our walk. Hey, Austin City Limits is here. Says Miami is beautiful. Good to see you, Austin City Limits. So I'm not sure if this is a personal yacht or if this is like a party boat. But I'm not sure if you guys remember, I think it was about this time last year, there would always be this mega yacht parked right here and would actually have a helicopter on top. And it always looked amazing. Hey, Lennox is here. Says good evening, everybody. Welcome. Sweet country living in Michigan. Says it was beautiful in Michigan today. Love that. Hey, Blue Cruise says great looking night in Miami. Welcome, welcome. Christian Wilson is here. Says I know why that building. Yeah, I think that's over on the other side though, Christian. Dusty Cole says thanks, Spud. How are you? I'm doing very well. Patrick Bateman is here, says hello. Good to see you. So I'll show you guys this boat. I think we're actually going to take a walk around and take a look at it. Slee is here, says hello from Sweden. Hey, John Roberts says, Tom, it's 80 degrees here in Wyoming. Well, John Roberts, you're going to have all of the our. If we just do a quick review, what is the main driver of this market, whether we like it or not? It's monetary policy, right? Is the Federal Reserve going to take a stance at Jackson Hole? A stance as they are going to continue with quantitative tightening, in which case they will continue to reduce their balance sheet, so let assets roll off the balance sheet, reducing liquidity from the system, and continue on their path of raising interest rates? Or do you guys think that Fed Chair Jerome Powell is going to come out on Friday when he gives his speech with a more dovish tone to sort of calm the markets? I don't know. I think that we're going to continue to see interest rate hikes to the tune of about 50 to 75 basis points. I think that's going to be par for the course. And I do think that we're going to continue to see quantitative tightening here. That is my prediction. Hey, Buy the Book is here. Welcome, Buy the Book. Good to see you. Yeah, Dusty Cole says, Tom, I gotta recommend a great podcast, Freakonomics. You know, I think I've been listening to them. That is actually a really good podcast. I agree. Hey, Cat is here. Good to see you, Cat. Welcome. Says, hey, Tom, always enjoy and learning. Thank you. Good to see you, Cat. Hey, Brevard County Real Estate is here. Says, agreed. Welcome, sir. Good to see you. So Brevard County Real Estate, I do have a question for you, and I think it would benefit the group here because we are going to get some housing data this week, and also Toll Brothers is going to report earnings. So I would love to get your opinion on what you think Toll Brothers, do you think they're going to beat analyst expectations in terms of EPS and top line revenue growth, or do you think it's going to be an earnings miss? But I think regardless of that, the thing that I'm looking for out of Toll Brothers' earnings report is probably the forward guidance is probably going to be the number one thing that I'm going to be looking at, because we heard from the National Association of Home Builders last week, and we talked about this and we covered it, and they said about 20% of home builders last month either cut prices to do one of two things. Number one, increase additional sales volumes. And number two, which I believe is actually more important, is to prevent existing clients that are under contract from backing out of their contract. So either they are dropping prices, providing incentivization tools to help close these deals. So I think that's probably going to be the biggest thing that I focus on. Brevard County Real Estate says, hey Tom, I don't think they will beat. Earnings miss, guidance will be bearish as well. Interesting. I think you may be right. So I think that they may beat earnings this quarter just because I think a lot of the negative aspects of interest rates going up are probably going to fall over into next quarter. But I do agree with you on the guidance piece. I think the guidance is going to be very, very light. But I think management's probably going to do that for obvious reasons, right? But here's the only other thing that I wanted to bring up as it relates to Toll Brothers earnings. So we got existing home sales data out last week. Obviously not too good, but one statistic from the report that was really, really eye-catching to me was that if you look at the sales volumes by category, so for sales volumes in the range of about $100,000 to $250,000, those volumes of existing home sales were actually down 39%. But what we've seen as we move up into the more higher socioeconomic status of homes that were being sold from $750,000 to $1 million, those sales volumes actually only declined 9%. Now, I guess if we really think about it, I think there's only real one reason why that could have happened, and I think it just has to do with rate sensitivity. I mean, if you think about it, who are the people that are in the market to buy a $250,000 house, right? Let's say if you want to put 10% down on the property and then finance the rest, those particular people are probably going to be a lot more rate sensitive as opposed to a particular family or a first-time home buyer that has a little bit of a higher price range around $750,000 to $1 million. So maybe they're not as rate sensitive as those other customers. But that's really the only thing I could think about. But oh yeah, Brevard County Real Estate, because most of those are cash. That's a really good point. Yeah, it seems as if demand in the, I would say like higher echelon properties, maybe upper middle class, is still rather strong. That's the only reason why I think Toll Brothers will potentially beat earnings this week, but we'll see. Future endeavors says we lost audio. Let me know if you guys can hear me. Maybe I'll have to restart the stream. Hey, Alex L says, what was the inventory for those price ranges? Yeah, Brevard County Real Estate is like in life, money goes to money. Hey, Rock Band 5 million says, hey Tom, good to see you. EBITDA says, sounds good to me. Copy that. Another interesting statistic, I was reading Barron's this week, and there was a couple really good articles. So I have some notes, a couple main takeaways. So before I get into the markets to look ahead stream, well, I guess I'll show you guys the FTX arena here. Looking beautiful, but did you guys know that the US labor market lost about 12% of its entire workforce due to early retirement? So if we really sort of unpack that and try to understand what that means, so the whole entire US labor market lost about 12% of its workforce to early retirement. So this is doing, well, a couple things it's doing. It's putting additional stress on the existing workforce, and I think that's why we're seeing companies have such a hard time retaining employees. So employee retention across the board is just horrendous, and I think that has really confirmed during all the earnings reports we've been seeing. Amazon is having a big problem with employee retention, Starbucks, Walmart. Wow, check this out. This is the Paramount Tower. Is there elections coming up? Oh, maybe it's local elections here in Miami. But, I think this is sort of inadvertently driving that wage price spiral, right? So if you have about 88% of the employees have to make up productivity for the others, let's say the 12% that decided to retire early, you're going to have a lot of disgruntled employees. And if they're like, look, if I have to do all of this additional work, well, I'm going to demand higher payment, right? And we've been seeing this throughout a lot of companies that we've been covering on Walks to Wall Street on the stream. Hold on, let me just cross the street here. I don't trust any of these cars. I will say one thing. There's a lot of people that blow red lights down here for whatever reason. I would say maybe a little bit more so than New York, but Marcelo says it should be the midterms. Possibly. Yeah, now that I'm a property owner, I should probably be paying attention to the local politicians, right? But anyway, from a lot of the earnings reports that we've been scrutinizing, one of the line items that a lot of the CEOs of the C-suite has been talking about is increased capital spending for wages. And what they've been trying to do is offload that cost to consumers, right? So either raising prices on goods and services to customers, but I think at some point that's going to reach a breaking point or a threshold, and they'll no longer be able to do that. The cover story of Barron's this week was very, very good as it relates to that exact topic. If you guys want to check that out and read it. Oh, this is a pretty good view of the Paramount building here. Hey, Jim Wolf is here. Says great live stream, Tom. Thank you. Good to see you, Jim. D is here. Welcome, D. Brian says that's dangerous for pedestrians and other cars. I agree. Good to see you, Brian. I'm loving the color scheme, though, on this Paramount building. I want to get a closer look. We'll cross at the Metromover station here. Smooth and Silky says, I know someone who took early retirement and had to come back out of retirement. Yeah, so I think that is... So I do know someone like that as well. One of my older coworkers. And I think a lot of people got caught off guard with inflation, right? So if you're retiring and you're living on a fixed income and you're like, oh, this is great, I have a couple $1,000,000 saved, or maybe I have $1,000,000. I could live off of the interest. Maybe that's $35,000 a year. But then inflation took off like a bat out of hell. And now we're dealing with plus 8% inflation, which is definitely... could potentially draw some additional people that have retired back into the workforce. Yeah, Vinny says, hey Tom, Dollar General and Dollar Tree earnings this week. Vinny, you're correct. So I believe they're reporting earnings on Thursday, Dollar Tree and Dollar General. And if you were listening to I think Vinny was on the live stream where we were going over the earnings report for Walmart. So as I was listening to that earnings conference call, the CEO of Walmart must have used the terminology trading down over 100 times on the earnings call. It was trading down, consumers are trading down. So he alluded to the fact that one of the reasons why Walmart beat analysts' expectations on their top line, so their revenue, is because consumers that would normally shop at, say, a Publix or a Whole Foods or something like that are now trading down and shopping at Walmart. So as they analyzed some of the data, the number one area where they had the most customer acquisition in Walmart's earnings report was income earners in the range of about $100,000 to $150,000. So that means not only the lower class, and I would say maybe the middle class, are feeling the constraints of inflation, but it seems like the upper middle class are starting to feel the screws tighten as well. So a lot of analysts, including myself, I think Dollar General and the Dollar Tree are going to have a pretty good report. I think that they're probably going to beat analyst expectations, and they may even raise forward guidance. So we'll see that, because the terminology trading down probably was brought up about over 50 times on the report. But yeah, so Vinny, we're going to do a deep dive in that. So Thursday's live stream. So I may not be able to do a live stream Thursday. I have another event, but if I can get back from Fort Lauderdale around like 6:30, then I will do the live. Hey, Nicholas Sturris says, hey Tom, if you think Miami drivers are bad, you've clearly never been to Newark, New Jersey. That's true. It seems like everywhere I look, there's a brand new building going up here in Miami. So if you guys remember a couple of weeks ago, I'd say a couple months ago on the streams, this was a completely vacant lot. There was nothing here. And look at how fast this building is going up so far. There's probably already 3 or 4 stories already built. And this is right outside of the Paramount Tower here in downtown Miami. Hey, Lena Sandoval is here. This is hello, Tom. Welcome, Lena Sandoval. Good to see you. I see NG says, I'm from Newark and I'm a good driver, but my neighbors aren't. I'll take your word for it, NG, for sure. Hey, SME Media says, Tom, New York Times had an article about the recent popularity of salvage stores to buy groceries and essentials. So what would that be? Would that be like, I'm trying to think off the top of my head. Maybe you guys could sort of help me out. What are some of the type of discount grocery stores? I know, what is one called, like Aldi? I think Aldi is one. Austin City Limits says Dollar General is a major moneymaker. Well, I think all eyes are going to be peeled on that report. Hey, Billy says happy Monday, Junior. Good to see you, my friend. Hope you're well. Nicholas Duro, welcome. Vinny, Brian says, do you think the aerospace industry in general is more stable than other traditional industrial in the current situation? I don't know. It depends. So I always like to use this terminology, follow the money. So there was a very good article this week in Investors Business Daily. I will share that article with everybody in the Discord. So if you're not in the Discord, please jump in there. But here's, I think, is going over the next 10 years. I'm trying to position my capital to where the money is going to flow, or where capital allocation will most likely flow. And to me, if we're talking about the United States, that's probably going to be in the semiconductor sector. Obviously, the Democrats and the Biden administration passed the CHIPS Act, which is going to provide multiple billions of dollars worth of subsidies to the semiconductor sector. Because let's face it, I think we could just be honest, the United States is getting our you-know-what handed to us by Taiwan and South Korea in terms of, I would say, innovation in the semiconductor industry, right? You have Taiwan Semiconductor, you have Samsung. So what I think this CHIPS Act is all about, well, these are some beautiful cars here, everybody. What I think this new CHIPS Act is really trying to do is entice, and we sort of touched on this yesterday, a more domesticated supply chain, right? We want to start to bring back those manufacturing jobs to the United States. So I think Intel is probably going to be the biggest beneficiary of this particular bill. I know that Taiwan Semiconductor has agreed to make multiple billions of dollars worth of investments into the United States in terms of production of semiconductors. So I think overall, if we think about the emerging industry trends, right? So whenever I'm trying to formulate an investing thesis, I like to look at the total addressable market. So I'm like, I say a couple things. The first thing I say is the company that I'm looking to invest in selling into a TAM that is expanding year over year? If the answer is no, very seldom I'll make an investment. But if the answer is yes, then I hammer down into industry group and stock selection. So I think overall, if we think about the number, I would say maybe let's say top 2 or 3 new emerging technologies that are going to be dominant over the next couple years, it's probably going to be EVs, autonomous driving vehicles, 5G, mobile devices, Internet of Things, IoT, machine learning, and the like. And if we think about the demand structure of that, all of these new emerging technologies are going to require semiconductors. So as demand and as adoption increases, it's sort of like the old saying, you want to sell the pickaxes and the shovels. I think semiconductors in general are those pickaxes and shovels. And if the government is going to throw billions of dollars at it for subsidy and for more advanced manufacturing facilities, I think that's probably where I'd want to be allocated, maybe over the next 5 to 10 years. I will say though, in all fairness, and I think the Investors Business Daily article outlines this very, very well, I think a lot of the new chip plants are going to take probably until about 2025 in order to get completely built and up and running. So it may take a couple of years for the benefits of the CHIPS Act to actually roll out. But I don't know, if I had to bet on an industry theme going into the next 10 years, it would probably be renewable energies and it would probably be semiconductors. What do you guys think about that? I think this will be fun. Since it's the Sunday night live stream, what do you guys think? If there was 2 particular industry segments that you could just put all your money in, like let's just say for fun, if you had to, what would be those 2 industries over the next 10 years that you'd bet on? It could be agriculture, EVs, whatever. What do you think they would be? Cloud computing, what do you think? Wow, check out this beautiful view of the 1000 Museum building. We haven't been over here on the live stream lately, so it's nice to take a walk over here. Hey, Estelle is here, says hello, good to see you, Estelle. Hey, Marcelo, this is an oil. Do you think it can get back to $130 before winter comes? So Marcelo, something that we're seeing that's really interesting to me is that crude oil, we're seeing a divergence here between natural gas and crude. Crude put in a top back in March. I think if you look at ticker symbol CL, crude futures were trading at like 140. Now they've retraced, trading around, oh, look at these dogs here, beautiful. Trading around $90. But natural gas actually is blowing past all-time record highs. And I think that's probably because of the whole Ukraine-Russia situation and Europe's dependence on Russia for natural gas, which is definitely a topic for another stream. Hey, DowJones.eth is here. Good to see you, my friend. Says, I need a vacation. You're more than welcome here anytime. Daryl says, Tom, if I had to pick, I would say electric vehicles and technology in general. I think that's a pretty good pick. Phil Jackson says, Tom, you should do your walk from Fort Lauderdale. Riverwalk and Las Olas are very lovely. So maybe we'll do that. I definitely want to start to expand the live streams a little bit more, but the problem is I just work so much during the day, and once I leave the office I turn on the camera and start streaming. So maybe as work dies down we'll start to branch out. Okay, so Austin City Limits says, Tom, I don't think oil will go over $90 a barrel for the rest of the year. Well, winter's coming. We'll see. Mystery Girl with Missy says, do you have a dog, Tom? You always love dogs. I do. I have a beagle. Love beagles. Ryan Royal says, I would definitely bet on cloud computing. So here's what I'll say about cloud computing. I think you're spot on. So there was a really good piece coming out of Piper Sandler. Apologize. There was an interesting research piece coming out of Piper Sandler where they said that cloud computing spending is expected to triple by the end of the decade. And this is when many people, I think I'm going to program this into the Nightbot, but a lot of the data points we talk about, I will either upload to the stream recap or I will put them in the Discord. But this is coming at a time when everybody thinks that cloud computing is pretty maxed out. And I can tell you it's definitely not. There are industries or segments of the economy that are still very, very slow to move to the cloud. I mean, it's probably going to be very obvious that some industries will probably always have a hybrid cloud environment, but it's definitely still in the early innings. I can tell you that with certainty. Hey, Vinny Castellano, good to see you. Welcome, Vinny. So this is one of those Lamborghini, I think SUVs, right? Harry Connor says Islip is an airport on Long Island. Yes. A lot of people have telling me to fly out of there to come to Miami. Austin City Limits says, Tom, I don't think oil will go over $90 a barrel for the rest of the year. Interesting. Treved says, hey Tom, what do you think about future share market? I mean, where do you see the future share market? Could you rephrase the question? Dude, says, I'm bullish on public SaaS companies as a whole. Yeah, it seems like, well, I think that's going to be very dependent on the Federal Reserve. And obviously we are going to be hearing from the Federal Reserve on Thursday when they kick off their Jackson Hole event, but we are going to be hearing from Fed Chair Jerome Powell on Friday. So a lot of those very high beta SaaS companies that we talk about oftentimes on the stream, many of them are very, very dependent on very low interest rates. So ever since interest rates have been extremely, extremely low, a lot of these SaaS companies have been so focused on growing top line revenue at all costs at the expense of profitability. And I think that's going to be increasingly more difficult to sort of run a business model like that, assuming we're going to enter in an interest rate environment that's rather high. Because if you can borrow money sub 3% and just say, we're gonna invest a ton of money in engineers, a ton of money in frontline salespeople, like account executives, to try to get a massive, massive funnel of recurring revenue. And then after that, we could focus on profitability. I think that may be a little bit difficult to do in an interest rate rising environment, but we'll definitely get more clarity on Friday. I guess I'll ask this. Do you guys think that during Fed Chair Jerome Powell's speech on Friday, do you think he's going to come off as a more dovish tone? Or do you think he's going to sort of stick to the plan and say, look, we got the inflation data out, even though that energy is coming down. If you look at a main component, which is shelter, that makes up about 33% of CPI, you know, that's still running hot year over year and month over month. So I think Fed Chair Jerome Powell is going to be forced to stick to the course and raise interest rates in either 50 basis point increments or 75 basis point increments. But what do you guys think? Hey, Gary says hello there from North Carolina. What's up, Gary? Good to see you. Minnesota, Walking Minnesota says, Tom, a solid real estate investment trust would be good for 10 years. Cities are struggling. We'll come back around in a few years. Interesting. Which one in particular do you think? I know that last night on the stream we were briefly touching on Simon Property Group, SPG. But I don't know. I think a lot of landlords here are getting greedy. You know, CNBC Make It actually came out with a pretty decent video, and we touched upon this last night's stream, but they said that almost 100% of the supply in terms of rentals that are coming on the market in New York City are coming from people that their landlords have raised the rent and they've decided not to renew. And there's a lot of people that are like, look, I can't afford this egregious rental increase. I'm just going to move out. So I think there's going to come a threshold where rents are going to come back down. SME Media is about the industry investment question. How about pharmaceuticals? So SME Media, I think you may actually be right here. So let's actually cover pharmaceuticals a little bit. So I think you guys know my take. I've said this take before. How do I phrase this? I'm not smart enough to know which drugs are going to get FDA approval, which clinical trials are going to be successful and which ones are not. I'm not smart enough to figure that out, to be quite honest. So I tend to not really, hey, good to see you. I tend to not really focus on pharmaceuticals just because it's not in my wheelhouse. But if we think about one thing that we talk about and review all the time on the streams is looking at relative strength. So as a market emerges out of a bear market, usually what you want to look for is one of two things. The first thing is you want to look for the leading industry group that is showing the most relative strength as opposed to all other indice groups or industry groups within the indice, within the S&P 500. And right now it's actually biotech and pharmaceuticals. You have a lot of biotech stocks trading near all-time record highs, showing relative strength. But to be quite honest and transparent, I think I will always miss all of those biotech stocks because a lot of them are very, very risky. Now, I know the big blue chips are probably not going to be as risky, but a lot of people where I think they could make a mistake. And look, if you have a pharmaceutical background, if you're a biomedical engineer, if you're in the industry, then that's on you. You should, delve into the space. I'm just not smart enough to figure out which drug is going to get FDA approval, which is going to have a successful clinical trial. So where a lot of people can lose a lot of money is they bet on these very, very small cap or micro cap pharmaceutical companies or biotech stocks that are very reliant on a single stream of revenue. So what do I mean by that? Usually a very small drug company, not all, but some, will have one drug in the pipeline, and if that drug doesn't get FDA approval, the whole business model is out the window and that stock can drop like a rock and go to zero overnight. So that's why I tend to stay away from biotech. Not because it's not a good investment. I just don't think I'm smart enough to navigate that space. Many people are, they have that expertise. I don't have an ego. I'm honest with myself. I am not smart enough to know which drug is going to be good, which drug is going to garner FDA approval. I actually leave that stuff to my brother. He's actually a biomedical engineer. I have no idea about that stuff. But SME Media, to your point, that's actually one of the industry groups within the S&P 500 that's actually leading, is pharmaceuticals, biomedical, biotech. So this is the Miami's Freedom Tower. Beautiful. The ABX girl says one specializes in one drug and one illness. Trevi says, hey Tom, cloud computing makes applications easier. That's why every company has switched to cloud computing. I would agree. I think the slowest segment that has been slowest to switch to the cloud is healthcare. So a lot of hospitals, home healthcare agencies, nursing homes. I think mainly because of HIPAA laws and compliance and things like that, but they've been really, really slow to transition. So I think there's a lot of big runway there. Hey, Anonymous Dude 123 is here. Says, thanks Tom for the beautiful night. It's good to see you, Anonymous Dude. Welcome. Hey, Ryan Royal says, Tom, working in pharmacy, the most drugs I have noticed being approved are marketed are drugs for autoimmune diseases. Wow. That's really interesting. That's actually really interesting. I remember a couple streams back, we were talking about pharmaceuticals and biotech as it relates to rare disease drug companies. And I remember this was right around the time where, Martin Shkreli was getting out of prison. Now, many people will, I think, jump to conclusions and it's easy to point the finger and judge somebody, but I really don't think Martin Shkreli is a bad guy. I actually think he's a very important person to have around. I think he's extremely smart, extremely brilliant, and a lot of the things he did have actually helped a lot of people. And I think just because he had very bad PR, I think if he had like a public relations person, I don't think he would have been in all the hot water he's been in. But if you look at it at face value, a lot of these rare disease drug companies or rare disease drugs, a lot of the larger pharmaceutical companies have no financial incentive to... We'll wait till the car goes by. Very seldom do they have any financial incentive to pour a lot of money into research and development, because if you look at the total addressable market for these drugs, some of these very rare disease drugs only go to treat like 5,000 people globally. So a lot of the big pharmaceutical companies are going to go after the big winners, right? The big sellers, like the Viagras, the allergy medicines. So I think there is a specific marketplace for rare disease drug companies to go in there, spend a lot of money on R&D, and unfortunately that means you have to raise the price, because a lot of these rare disease drugs are very old and outdated, and even though that only 5,000 people or less suffer from these diseases, I think they deserve a new drug, right? They deserve a new updated drug, and the only way they're going to get that is if prices go up and they use that money for R&D. So look, I'm not saying what he did was right, I'm not saying what he did was wrong. I just think the media has a little bit mischaracterized him, that's all. But he went to jail for something completely unrelated, has to do with his hedge fund, but all right, everybody, so we are standing right across the street from Bayside Marketplace. Walking Minnesota says, Tom, did you see the Netflix documentary Dirty Money? Maybe you were the one to tell me about it. I haven't. What is it about? I would love to know what it's about. Somebody says, what about Bernie Madoff? I don't know. I mean, he's dead and very greedy person and scammed and ripped off a lot of people. So I don't really usually like paying much attention to him. Carson says, Tom, have you seen Mark Cuban's low-cost drug company? So I have, and I've actually been doing a little bit more research into Mark Cuban's drug company. And yeah, let's just say I've been doing a little bit more research into Mark Cuban's drug company, and I will be talking about it in more upcoming streams. Joseph says, I wish cloud computing could help my insurance company remember I'm a member, so I do not have to you had tornado warnings in Jacksonville, Florida today? Yikes. Please be safe. Hold on, I think my chat is a little bit messed up here. Ryan Royal says, Tom, diseases such as arthritis, paralysis, and migraine headaches, injectables seem to have the largest profit margins, and only people who use them once a week and once a month. Yeah, I think a lot of the big pharmaceutical companies are pouring a ton of money into Alzheimer's medications. Unfortunately, there hasn't been many big breakthroughs. I wish there were, because Alzheimer's is such a horrible, horrible disease. But there's a lot of money that gets poured into research and development to try to address Alzheimer's. So, let's cross the street here, everybody, so we can have a better view. Hey, Christy Camley is here. Hey, Christine. Christine Camley, welcome. Everybody, so to start off the market to look ahead stream, I would like to just briefly revert back to what we were talking about last night on the stream, and that is if I had to do it all over again, right? Let's say if I was just coming out of college, if I had to pick a specific industry to work in, I would pick the cybersecurity industry. And I do that for a couple of reasons. Number one, I think that is going to have one of the fastest growing total addressable markets over the next 10 to 20 years. And we actually have a cybersecurity powerhouse reporting earnings after the bell tomorrow on Monday. That is Palo Alto Networks. So they will report after the bell. If we have time, we'll do a deep dive into that earnings report. But I think in addition to semiconductors, for an industry trend or a theme that I think is going to provide, I would say, alpha or generate alpha in someone's portfolio, I think if you have exposure to cybersecurity, I think you're going to do very well, because cybersecurity has really turned into one of those things that was a nice to have at a business to a must have. So back in the day, people were like, yeah, I'm not sure we really need to protect our corporate networks. Maybe we'll do it, maybe we'll look into it. But now it's, if you're a big IT director at a company and you're not at least allocating 10% of the budget to cybersecurity spending, you're probably going to get fired. So I like to bring these things up because I like to walk the viewers through and also walk myself through to get a refresher about how to generate ideas. So I think investing is really about idea generation. And one of the ways I do that is I like to start from the big picture or macro and then work down. So what industry segments are growing their total addressable market? And then once we identify those industry segments, then we can whittle down to the company level or the stock level. For example, if we know that cybersecurity is going to do very, very well over the next, I'd say 10 to 20 years, well, what are the best cybersecurity companies? Which companies are compounding out their earnings at an annualized growth rate of 25% plus per annum? Which companies have the best return on equity? Which companies have the best revenue growth, the best pre-tax and after-tax margins? So when you're trying to formulate an investing thesis, it's always appropriate to start from the big macro picture. Where's the biggest addressable market? Whittle down industry segment and then whittle down stock segment and say, okay, which company within this sector is producing the most profits, has the best management, and the best product. So Palo Alto Networks is definitely up there. So we will be doing a deep dive into that earnings report tomorrow after the bell. But for now, we are at Bayside Marketplace. Hey, Andy S. is here. What's up, Andy? Welcome. Willie is here. Good to see you, Willie. Wow, DJ says, Tom, I'm moving to Miami in a month. Fantastic. What made you want to move to Miami, D? Is it a new job opportunity, or are you retiring down here? What is the reason for the move? Sally is here. Good to see you. Welcome. Hopefully you are well. So we're walking Bayside Marketplace. And for Sunday night, it's actually surprisingly busy. I would not think it would be busy this late on a Sunday. I thought it was actually going to be a little bit less crowded. But we're also going to be hearing from Zoom Video. So Zoom, ticker symbol ZM, was one of those stocks that really took off during the pandemic, actually. Got to trading at stratospheric valuation, has now pretty much come down back to earth and is retraced almost 90%. I would say about 90% of all of its gains, but if it can continue to grow earnings, if it continue to have strong, solid revenue growth, there may be a play here, but we're going to talk about that a little bit tomorrow. My only concern with Zoom is that it's in such a crowded market, right? So for example, we were talking about Microsoft Teams. Why should I pay for Zoom if I already have MS365 and I get Microsoft Teams for free? I could do all of my internal conferencing on there and I don't have to pay. So I think as we move into this recessionary environment, I think Zoom could be one of those products that may be deemed as a nice to have and not a must have, especially if your particular organization, if your particular company is a Microsoft shop. Hey, photos from around New York. Good to see you. Photos, how is the weather over there in New York? This is always a nice view of the skyline here. Joan Roberts, welcome, good to see you. So I want you guys' opinion on a particular company that will be reporting earnings on Tuesday. That's Nordstrom. So Nordstrom is a company that usually services, I would say, higher demographic, higher net worth individual clientele. So I think that's going to be a pretty big tell into the health of the consumer that has a habit of spending money on higher ticket items. So I would say probably the top 10% of Americans. So I think this week on Wall Street is going to give us a pretty good idea about the health of the overall consumer from every demographic, from the lower to middle class, as we have Dollar General and the Dollar Tree reporting earnings, to the upper class as we have Nordstrom reporting earnings. So if you had to take a pretty good tell here. Now, you may be asking yourself, why would I use Walmart's earnings report as a tell for Nordstrom? Well, I'll tell you why. If you remembered from the conference call, Walmart's CEO actually came on the call and said that the #1 growth sector for new sales came from earners making $100,000 to $150,000 a year. So that means even the higher end consumer is starting to trade down and buy cheaper products and services. So if we think about people who make $150,000 a year or more, they probably shop at Whole Foods, they probably shop at Publix or Wegmans or something like that. And if they're trading down shopping at Walmart, Well, what does that mean for people who shop at Nordstrom for clothes? You know, they could be trading down to like a TJ Maxx or something like that. So, I don't know. I think we could see trouble brewing on the earnings report. War Walker says Tom, Nords are a relic of the past. All right, let's see if we could see any dolphins in here. Sometimes we can, you just got to keep your eyes peeled. Hey, Raj says, hey Tom, how is Walmart tracking that income threshold information? Probably through credit card data. If I had to guess, probably through credit card data or through the app. You know, let's say if a consumer is purchasing on an American Express Platinum card or something like that, that data probably gets recorded as opposed to somebody purchasing from like a Discover card. So I think they could pull data from that. Also, the Walmart mobile app may be able to provide some of that data. But I think it's a good question. I think it's a good question. They probably pull the majority of that data from credit cards. Wow, check out this view, everybody. This is one of my favorite views in all Miami. Hey, Jimmy is here. What's up, Jimmy? He says, hey, Tom, your thoughts on condo as an investment property via Airbnb or VRBO in Miami? So, Jimmy, here's what I'll tell you, and you have to be very, very careful about this, okay? Because there's a lot of real estate agents out there that will not tell you this. But a lot of the condominiums and apartment complexes here in downtown Miami and in South Beach have very, very strict rental laws. Well, check out this plane taking off from Miami International Airport. They have very, very strict rules and regulations about if you can use your units for short-term rentals or not. So before you even look at a property, before you make a purchase, especially if it's a condominium, you should probably get approval from the board to make sure that you can do that, and I would get it in writing. That's actually one of the reasons why I opted not to buy a condominium, and I actually bought a standalone property, because single-family homes, you could pretty much do whatever you want depending on the local municipality that you're in. You could either use it for long-term rentals, short-term rentals, and you have a little bit more freedom. If you have to deal with HOA and a condominium board, that could be very, very difficult. So what I would tell you is make sure you get approval that you can actually do it, because they are clamping down like crazy here on people that are buying properties and using them for short-term rentals, especially now that inventory is so low and rental prices are skyrocketing. A lot of people are complaining about Airbnb. A lot of people are complaining about VRBO or Verbo, or however you pronounce it. So that's sort of the piece of advice I'd give you. Yeah, Out and About says condos have too many rules and regulations. Yeah, so Out and About, I think in general you can do it, but a lot of people, unfortunately, there are real estate agents out there that may not know the market, they may not be educated, and they just are looking to make a commission sale, right? So you gotta make sure you find a realtor that's sharp, that knows what they're doing, and that could show you a list of properties that are located in a jurisdiction or municipality that allows those short-term rentals. So. DJ says, what neighborhood do you live in Miami? I'm not going to disclose that, to be honest. Nick says, check financials and meeting minutes for special assessments, is Rich. Agreed. I think the number one thing you got to do, especially if you want to be a real estate investor, is you got to find a real estate agent that is like a rock star that you can trust. That's like the number one thing, I think. But yeah, DJ, sorry, I'm not going to disclose like the exact location, but it's somewhere near the Miami area. Estella's here from Australia. Good to see you, Estelle. Welcome. If you guys are enjoying the live stream tonight, feel free to leave a like on the video and subscribe to the channel if you are new. Hey, Silviana Santos is here. Good to see you. Welcome. Rock Band says, Tom, what is the name of the Cuban restaurant you like? I forget the name of it. I gotta think. I think once I get away from the music, I'll be able to remember. I think it was called, that I'm really a big fan of is called Sazon Cuban Cuisine, or Sazon Cuban Food. I think it's on 72nd Street in North Beach, so right over the causeway there from Normandy Shores, or Normandy Isles, I would say. And it's actually pretty affordable prices there too, to be honest. Hey, Gregory's here, good to see you. Yeah, I'm going deaf too. Carlos, just chill out a little bit on that, please. Hey, Brad's brain is here. What's up? Good to see you, Brad. All right, let's make our way out of Bayside Marketplace. So as a quick review, everybody, obviously Tuesday is going to be a big day. I think Tuesday is going to be the second biggest day of the week on Wall Street for, I think, one reason alone. And that is on Tuesday, the Census Bureau will report new residential sales data for July. So obviously last week we got existing home sales data. Now this week we are going to get new residential home sales data. So many economists on Wall Street are forecasting that sales for brand new, again this is new, not existing, single family homes will come in at 577,500 new homes. Okay, that's going to be about 12,500 homes less than in June. So we're seeing a sort of a trend here of home sales both in the existing housing market or existing home sales market and the new home sales market roll over here and start to decline. Now, I think this is probably for one of two reasons. Obviously, the one that everybody's talking about is rates. So if we think about where rates were this time last year, roughly 3%. You could get a 30-year fixed rate mortgage for around 300 basis points, around 3%. However, now, just last month, rates have gone up 100%. Now, to be fair, they've come down a bit, obviously since that 10-year US Treasury yield has come down, but still borrowing costs have gone through the roof. So I think we should be paying attention to existing home sales data, and we are going to hear from Toll Brothers. So for those of you who are just joining, we already went over this a little bit during the early part of the live stream, but Toll Brothers is going to be very important to watch in order to gauge the health of the higher end section of the housing market, okay? So if you think about who buys a home from Toll Brothers, it tends to be the upper middle class or even the upper class in general. And if we think about the piece of economic data we got last week from the National Association of Home Builders, they have reported that home builders in the United States as of last month, across the board, about 20% of them had to drop prices for one of two reasons. Number one, to help increase overall sales, But number two is actually the most important, in my opinion. It was to prevent existing contracts from canceling. So people that pulled the trigger on a home, maybe they're getting a little bit of cold feet. They're like, maybe this isn't the right decision for me. In order to keep those deals afloat, they've had to reduce pricing. So I think that's good news for consumers. If you're a first-time home buyer, I think you're probably going to have a little bit more bargaining power. So I think long gone are the days of getting into crazy bidding wars, paying hundreds of thousands of dollars over the asking price, waiving inspections, things like that. It seems like the housing market is returning to some sort of normalcy, finally. So look, if you're in the market for a home, I think you should still be looking for deals as long as it fits your financial requirements. And I think you're going to be able to have a lot of room to negotiate here. So that is a plus. Hey, Elliott Wave Review says, Tom, what do you think of the BRRR method of real estate investing? I know some people who do that. For me personally, I think what works better is just buying properties, holding them, and renting them out. But I guess it's kind of similar to the BRRR. What is that? The buy, renovate, refinance, rent and repeat? I think that's what the acronym stands for. I think it's buy, renovate, rent, refinance, and repeat. I think that's how you're going to get a lot of below value real estate. So I think I already told you guys this story. When I was in the market to buy my particular piece of property, everybody always wanted to look at the properties that were completely remodeled. There was no work that needed to be done at all. And you're never really going to make money that way, to be honest. I mean, maybe over like 20 or 30 years, you're probably going to make money, but there's no alpha in there, right? You're already buying at rack rate. What you want to do is you want to try to look at below market value deals. You know, maybe there is a little bit of plumbing work that needs to be done. Maybe, you know, the roof is a little bit older or the kitchen is really outdated. Those are some projects you could probably take on yourself. If you put maybe 10 or 15 grand into it, you could probably make a return of about, you know, $50,000 to $80,000. But many people are lazy and they don't want to do it. But if you want to put some elbow grease in there, you could definitely generate a lot of profits with that. Because one of the theory behind that is once you do all those renovations, you can then have your home appraised and then refinance your house or rip the equity out because you've increased the value of your home, right? And then you could use that money to go and acquire another deal. So I think it's a good idea. Photos from around New York, so I just Googled it. It is buy, rehab, rent, refinance, and repeat. Yeah, I think I got it right, did I? Similar. Hey, Andy is here from South Korea. Good to see you, Andy. Welcome. Hope you are well. Hey, Strider1239 says, Tom, what are your thoughts about China's economy right now? It seems like they're in a downturn and trying to prop up the yuan by selling U.S. Treasury holdings. So we've been talking about this for a while, and I've always been saying the number one thing that is the biggest concern to me is the Chinese commercial paper market. And I think I wrote about this in the Behind the Street newsletter. I think maybe it was about 2 or 3 months ago. If you scan the QR code on your screen and you punch in your email, you'll actually be able to read sort of the article that I wrote that I'm talking about. But it seems like the housing market in China, or the real estate market, is starting to crack here actually. And if you remember a couple of streams ago, maybe like a month ago, I'm like, look, it doesn't seem like anybody's paying attention to this absolute unmitigated disaster in the Chinese commercial paper market. And I've been saying, look at all of these crane share bond funds, right, that track Chinese commercial paper. they're trading at lower prices than they were during the pandemic in 2020. So if you thought there was a liquidity crisis or a credit crunch during COVID, what do you think the market is looking like now? You know what I mean? So I think that there could be some problems. But I think that depending on how much exposure a lot of the US financial firms have to a lot of this Chinese commercial paper, I think that is going to be the deciding factor of just how bad it's going to get. But I don't know, could it be a contagion? I guess we'll just have to figure out how much exposure a lot of these Western banks have to it. The ABX girl says there was a story about a social worker in Chicago, bought her first home and did not have a fixed rate mortgage, and now she needs a second job due to the extra $300 a month. Jeez. Stories like that really break my heart. If she watched the stream, I hammer you guys about this almost every day. Do not get talked into an ARM or an adjustable rate mortgage. Do not get talked into that nonsense. I'm even surprised they still have them. I'm even surprised they still have adjustable rate mortgages. But yeah, for anybody who's watching the streams, never under any circumstance get an adjustable rate mortgage. You're not Ray Dalio, you're not Stanley Druckenmiller, you can't predict where rates are going to be. Just lock it in and be done with it. But yeah, if you scan the QR code on your screen, you will be signed up to receive the free Behind the Street newsletter, where I cover the US equity markets, fixed income, emerging markets, and the like. Hey, Gennaro says, hello, Tom. Tuning in from Brazil, welcome. Walking Minnesota says, I think it was on Friday that you were on a bridge and you put up the QR code. Ah, that's funny. Walking Minnesota, that's funny. Striders is very true. There's news that the Chinese government is asking government workers to purchase houses. Well, I also think there's a mortgage strike, right? I think that there's a lot of consumers in China that are just striking on their mortgage. They're like, I'm not paying it. Which is really wild. All right, let's cross the street here. Hey, Dem is here. Says, hey there, good to see you. Yeah, Willie's like, it helped cause the financial crisis. You're right. This is the very famous Intercontinental Hotel right here. Hey, John Roberts, thank you for joining, and we will see you tomorrow. What's it called?
The station for that. Ain't it?
Oh yeah, right there. Just keep walking and then just go up the escalator.
Yeah.
Yep, no problem. DJ says, I lost your comment. DJ says, do you think it's possible to cash flow with investment in South Florida at current prices? Yeah, my property cash flow is ridiculous. You just got to run the numbers. You just got to do the work and run the numbers, right? I think you could find a good real estate deal in any market. It doesn't matter if rates are at 15%, it doesn't matter if rates are at 3%. It comes down to sitting down, doing the work, finding realistic rents, right? So a lot of the times when you're analyzing deals, the realtor will send you a sheet and says, oh, the rents are currently at $1,000, but you could easily raise these rents to $3,000. Don't listen to them. A lot of those sheets that they send you, like the comp sheets, I'm not going to say all the time, but many times they're just totally ridiculous. So it just comes down to running the numbers. If you think with the rents that you can command realistically in that property, it could cover the mortgage, it can cover the taxes, cover the insurance, then I think you should pull the trigger on the deal. Where I think a lot of people get in trouble in real estate is they look at their friend and they're like, oh, my friend bought this house, that means I have to buy a house. And they don't run the numbers based upon their own financials, they run it based upon, their friends to try to keep up with the Joneses. But you can find a good real estate deal in any market across the United States. You just got to do the math. You just got to run the numbers. But this is the 200 Southeast Financial Center. This is actually where Citadel Securities will have their satellite office. It looks beautiful amongst the clouds here. But you know what I like even better? Check out that massive American flag there. That's insane. So everybody, Wednesday, it's going to be a little bit of a light day on Wall Street, but we do have some economic data coming out Wednesday, August 24th. The Census Bureau will release the durable goods report for July. The consensus call is for new orders for durable manufactured goods to increase 0.5% or 0.5% month over month to $274 billion. So Wednesday is going to be pretty light. We are going to hear from the Royal Bank of Canada. They will be reporting earnings. But obviously, as we've been talking about today, Thursday is probably the most important day. Oh, check out this cat. Hey. Hey. Doesn't want to hang out. Wow, this is a really, really good shot here. Hey, Truth Teller is here. GGMYC, what's up? Good to see you, good to see you. I know, Anna's like, you should definitely carry treats during the walk. We should, we will. An enterprise software company, everybody, that we always talk about, Salesforce, ticker symbol CRM, will be reporting earnings as well. I think that's going to be an interesting one to watch too. Salesforce is more of a mature company now. It seems as if much of their growth comes from acquisition these days. So we may do a dedicated stream solely covering Salesforce earnings, just because I want to do a deep dive into the financials around Slack. So Salesforce did make an acquisition of a company called Slack, previously traded publicly under the ticker symbol WORK. That is a work collaboration tool, a workforce collaboration tool that competes with the likes of Microsoft Teams. But again, I think now that, businesses are concerned about recession, do you need to pay extra money for Slack, or do you just want to use the free Microsoft Teams suite that everybody uses? I don't know. I think Slack is one of those things that's potentially turning into a nice to have as opposed to a must have. And again, I know that's a controversial statement, it's a controversial topic, but I think we need to be cognizant of that. Yeah, Brad's brain, my gosh. Gregory's like, I like Slack. So I forget, Gregory, do you use Slack at your job? Or I think you were telling me you use it at college, maybe, I forget. I think Slack is a pretty good piece of software, but if I was a C-level at a company, if I'm looking for ways to save money, and if I was a Microsoft, I think I'm probably going to cut that out. Wow, check out this massive yacht that's rolling by. I think it's towing a boat, by the way, too. Hey, Sabrina Fair is here. Good to see you. Welcome. Myra King says, yeah, it's scared. Yeah, maybe we should bring cat food on the walk. This place always has really nice cars outside. Hey, Walking Minnesota says, yeah, my latest company ditched Slack for Teams. Yeah, so that's exactly what I'm saying. I think we're gonna start to see, a rude awakening here as companies look to cut costs. I think we're gonna see a pretty big rude awakening. Here, let's check out the view and then we'll walk over to Brickell. What we're going to see, I believe, is something that's called trimming the fat. A lot of these companies, as we've been seeing, I think we already covered Wayfair, the online e-commerce platform for furniture buying, has laid off about 5% of their global workforce, or about 900 people. I think we're going to see this trend continue. Now, as we've discussed, I don't think this means Armageddon. What I think this means is that there was potentially a lot of over-hiring because we've had so much pull forward from the pandemic, right? The Federal Reserve printed a bunch of money, the federal government sent out checks to people, provided so much liquidity in the marketplace where there was a massive amount of spending. And they needed to hire employees to keep up with that spending. And now that that spending is tapering off, well, you don't need those employees anymore, right? So I think you are going to see a lot of layoffs isolated into the segment of customer experience roles, customer relations roles, things like that. Obviously, as we talk about all the time on the stream, I think if you are working at a company and your position directly impacts revenue, you're going to be fine. The closer you are to generating revenue for the company, I think you'll be fine. So to the left, you'll see the Aston Martin building, one of our favorite buildings on the stream, one of the more iconic buildings here. DJ says, I work for a Microsoft company and use Teams. It seems to work well. Yeah, I mean, it works fine for me. I mean, in full transparency, I use Microsoft Teams. My old tech company, before I left, we actually at a time used both. We used Microsoft Teams and Slack. That was because we were going through a merger. So I'll have to reach out to some of my old coworkers to see which particular piece of software they use now. We'll see which one they kick to the curb. Dem says, what time is it there now? I believe it's right around, I don't know. I think if you type !time, T-I-M-E in the chat, the Nightbot will drop the time here. D-Hot says it's 10:10 in Miami. Thank you, D-Hot. Appreciate it. Appreciate you, my friend. Hey, Western Mass Dave says, hey gang, had a busy weekend, hope you're well. Dave, it's good to see you, my friend. Welcome to the Markets to Look Ahead stream. So during the beginning of the stream, I read this statistic, but I want to read it for the people who are just joining. So as we've been talking about, as it relates to the CPI numbers, one of the main things that's been driving inflation higher has been wage gains. So month over month and year over year wage gains. And I think the thing that's been driving that is the labor force participation rate declining month over month, which means there's less of a talent pool for companies to hire from. And when there's less of a talent pool for companies to hire from, that puts a lot of the bargaining and negotiating power into the hands of the employees. So check out this statistic. I couldn't even believe it when I read it. It says US labor market has lost about 12% of the overall workforce due to people retiring early. So 12% of the workforce has been lost due to early retirement, if you can believe that. So my question is, do you think we'll start to see the trend reverse and have a lot of those people that took early retirement be forced to go back into the labor force because of inflation? So let's say if you retired, maybe you had $1 million balance, You were planning on drawing down 7%, living off of, low $30,000 a year, $40,000 a year. But now you are no longer able to do that because your cost of living has gone up 8%. Food has gone up 7% year over year. Maybe your rent has gone up as well. So what do you think? Do you think we're going to start to see this trend reverse here and a lot of people that took early retirement start to come back into the workforce? But this is the Epic Hotel. Always seems like there's some very nice cars out here. Hey, Juan Pablo is here. Good to see you, Juan. Willie says, I was 58. So Willie, you retired at 58? Kirby says most FANG companies are not hiring. They're even laying off. Yeah, I think Microsoft is in a technical hiring freeze too, I think. Somebody's like, Tom, do you ever wear a watch? Very seldom do I wear a watch, almost never. I'm not a big watch guy. I think this is a Ferrari, right, everybody? Kirby says, Tom, most retail stores are severely understaffed. Can't imagine even less workers. Yeah, well, I mean, I think we got that from, I think we heard that exact same thing from Walmart's earnings report. What did the CEO of Walmart say on the conference call? They said one of their biggest expenses for the quarter was increased wages and extreme employee turnover. So I think you're seeing broad-based, since the labor force participation rate is dropping, the talent pool is smaller, and when the talent pool is smaller, it puts the majority of the work onto those too few employees, and when those too few employees are stressed and they're overworked, what do they tend to do? They tend to churn. So a big cost across the board, especially in companies that are big box retailers. You think about QSR locations, which are quick service restaurants. You want to talk about Starbucks, a lot of the fast foods. They are having a hell of a time retaining talent. So one of the solutions I actually sell in my job is to help these particular companies increase employee retention. So it's definitely to Kirby's point, it's a massive, massive problem now. And it could be very, very expensive for these particular companies. So labor force participation rate is declining. You have about 12% of the overall workforce in the United States completely wiped away due to early retirement. That increases workloads on people that are working. And when workloads are increased without any additional pay, workers quit. And it seems like it's a never-ending perpetual cycle. And maybe as the Federal Reserve gets a little bit more aggressive with raising interest rates, hopefully some of this stuff will reverse and trend will get back to normal. 11's his question is, where have all the employees gone? Why the sudden labor shortage? Where are they getting the money? Stimulus is gone. Well, I think we just answered maybe one of the points. So about 12% of those, 12% of the population, or excuse me, 12% of the labor force that was lost was due to early retirement. So I think it's a combination of a couple things. Early retirement, maybe excess savings potentially. Yeah, I mean, I think those are really the only two answers. Anybody else have anything as to why this could be? I mean, the concerning thing to me is just the labor force participation rate is so low, right? So we were talking about this particular piece of data that it took about 2 months for the US economy to lose over 20 million jobs due to the pandemic. And it took about 24 months to regain all those jobs. So the good news is that all of the jobs that were lost during the pandemic are now all back. However, if you really, really hammer down into the intricacies of that data, there's about 623,000 less people working than there were in 2019. So even though we've hired all of those people back, if we look at net, there's still about 623,000 people that have not yet re-entered the workforce. There are about 623,000 people that are not working as they were during the pandemic. Or before the pandemic, I should say. Unlimited stimulus is potentially gig work. Hey, Jones is good, man. Tom, cheers. Good to see you. British Gray is here. What's up? Herbert says, Tom, I do, but it's very long for the chats. Ed says, long COVID has taken out a lot of employees. That's a good point, Ed. That's a good point. So the potential ramifications of COVID-19 on particular employees, let's say if you used to be a warehouse worker or something like that, and you have long COVID, so maybe your stamina isn't back up to where it used to be. Maybe you get winded, let's say more easy than before. That's also a good point. I never really thought about that. Good point, Ed. Hey, Josie is here. Says, hey, Tom, how you doing? Doing good, Josie. We're just walking along the river here in downtown Miami. It's a beautiful, beautiful night. The humidity has since come down a little bit. Dem, if you want to see it, you could follow me on Twitter at Walks Wall Street. We usually post a lot of our equity research there for free, and you can connect with us there. Hey, 925 says, hey, Tom, I recommend you go to the Florida Keys. The water is crystal clear and the hotels are amazing. It's a good time. I live in Miami. I go there every spring break. You know, I definitely have to get out of there. I definitely have to get out there. The only problem is I'd probably need to rent a car to do that, right? But maybe I'll do that. Maybe I'll rent a car, go out there one of those days. Maybe we'll do a live stream from there. I'll give you guys one more view of this building here. Hey, Felipe, good to see you. Welcome. Trust you're well. So I know we were talking about China a little bit on the stream, and I think a lot of the ramifications of the zero COVID policy is starting to hit earnings reports. So I was looking into Tencent Holdings, and they had about a 3% decline in quarterly revenue at Tencent. This is the first drop since the company went public in 2004. So think about that for a second. Regardless of if you agree with it or not, I think that's not the question, right? Regardless of if you agree with the zero COVID policy or not, it's definitely having an impact on corporate earnings, right? I don't want to get into a big fight about is it good, is it bad? It's really not the point of the stream. The point of the stream is to analyze it from a finance standpoint. And I think we're starting to see big negative impacts in earnings. I mean, if a company like Tencent is seeing revenue declines, when a company of that caliber should probably be seeing double-digit, mid to low teens revenue increases, that's a big problem. And I think that trend is going to continue. Hey, Dr. Longus is here. What's up? Good to see you. Cooking says, hey, Tom, this kind of reminds me of downtown Chicago. Very nice. Hey, Line Sync is here. Brad's Brain says it's not long COVID. How many people do you know with long COVID? So I would probably say it probably does have an impact, but maybe not to the caliber that many people think. Long COVID probably affects older populations probably a little bit more than, let's say, me. Let's say if I had COVID, I probably would just get over it. But let's say if you're maybe an older individual, something like that, you could have lingering issues. It's possible. Hey, Ibrahim Azam, welcome. Good to see you, Ibrahim. We are walking here at the Miami Riverwalk, overlooking a lot of these nice yachts here. Yeah, Western Mass Dave says I've still managed to avoid it. Check out this boat coming by. You know, let's go up on the bridge so I can give you guys a bird's eye view of all the boats coming by. And I'll get you guys an even better view of all of these supercars here. Wow, Dr. Longus says, hey Tom, I'm 52 years old and I had long COVID, it was rough. Well, please take care of yourself, my friend. Please, please, please. Just to touch on the theme of the week, because I really want to drive a point home here. We are going to start the meeting at Jackson Hole. So this is when the Federal Reserve comes together to sort of talk about the trajectory going forward in terms of monetary policy. So you really have two sides of the house here. Number one is the monetary side of the house, which is the Federal Reserve. And number two is you have the fiscal side of the house, which is more along the lines of government spending as opposed to, the Federal Reserve setting the Fed funds rate, lowering or raising interest rates, and expanding or decreasing or offloading assets from their balance sheet. So I think we need to be very cognizant of that. Friday is going to be a very important day on Wall Street because Fed Chair Jerome Powell will be giving a speech at Jackson Hole, Wyoming. And I think he is really going to set the tone or set the pace of monetary policy at that speech. So we may be doing our first ever edition of the Behind the Desk stream on Friday. I will probably have CNBC up on the live stream. We could have the live chat going, talk about what we think Fed Chair Jerome Powell says, and sort of analyze that. So hopefully I will be able to get all that stuff up and running by Friday. But if not, please, please, please tune in to listen to Fed Chair Jerome Powell speak, because I can guarantee you with certainty that that is going to move markets. So that will be coming up on Friday. But right now, this is the City National Bank building, looking fantastic. Hey, Kirby says the U.S. physician shortage is getting worse. What can people do about it? So you know what? I think we touched on this, didn't we, Kirby? I think we touched on the pharmacist shortage in the United States. So maybe for all of, I know we have some viewers that are pharmacists. Did you guys hear that CVS, Walgreens are going to be offering one-time bonuses of up to $75,000 for all new hires that are new pharmacists? Supposedly, the United States has a crazy, crazy shortage of pharmacists. So look, if you want to go in a pharmacy, I think that would be a pretty good time. You'd probably get a nice hefty sign-on bonus. I think Ryan Royal works in pharmacy, I think. Yes, Sabrina Fair says, yes, Tom, pharmacist shortage. Yeah, Western Mass Dave says, wow, I didn't hear that. Yeah, so Dave, a couple nights ago on the stream, we covered a Bloomberg article where they were interviewing an executive at CVS, and they said that they have such a shortage of pharmacists that they are offering incentivization packages up to $75,000 one-time sign-on bonuses if you apply and get hired to be a pharmacist at a CVS. Hey, Perry is here. Says, hey, Tom, good to see you, Perry. Welcome to the stream. Medea is here. Good to see you, Medea. Michael Stein says, that's nothing. 75 G's is nothing. I'll take 75 G's if you're going to give it to me. I'll take 75 G's. let's see what's coming up here. Very windy tonight. Ryan Royal said you need that bonus to cover a good psychiatrist and double knee replacement. It's a tough job. Yeah. Probably extremely overwhelmed now too. Happy is here. Good to see you, Happy. Michael Stein says they make over 600,000. I'm not sure about that. I mean, I know that pharmacists are very well, handsomely paid, but I don't think it's 600 grand. I don't know. If I had to guess, maybe 160, 165, which is a very, very good income. Very good income. Yeah, Charles D says they should deposit the funds into a 401k plan. Hey, Gene says, Tom, sir, your chatters hope one day a Bal Harbor shop stream will be in your future. You know, I thought about that, but sometimes it's difficult to stream from any other place besides like downtown Miami or Brickell, because during the day I'm working like crazy hours, and right when we start streaming at 8:30 is sort of when I stop work. So I don't know, maybe it's in the cards. I'll definitely have it in the cards for sure. Hey, Brad's Brain says, Tom, my industry is doors, garage entry, commercial, residential. I know we're hiring everywhere. Yeah, so Brad, I think to Brad's point, this is very important to touch on this subject, because there's a big shortage of skilled labor in the United States. So generally speaking, if you can turn a wrench, if you could fix something, you can have a job in this economy. There is a massive shortage of skilled labor. I have a couple of my buddies from back home and my college days that are in labor unions in New York, Local 14, Union of Operating Engineers, Electricians Union, Iron Workers Union, and they can't even get apprenticeships, kids to join the apprenticeship program. So if you can turn a wrench, you can have a job. All right, so this is Bank of America Tower down here in Brickell. Hey, what's next? Says Tom, would you leave South Florida if a hurricane was approaching? It depends on if I'm mandated to do that. If the government said there's a mandatory evacuation, I would be out of here so fast, because what happens is, and I don't really want to talk bad about anybody, but there's a lot of people that when the government tells you to evacuate or local authorities tell you to evacuate, they wind up staying. And then 9 times out of 10, what happens is they wind up having to be rescued, and they put our first responders in very, very grave danger doing that. And they were already told a million times, dude, you got to evacuate. So if there was a forced evacuation, 100,000%, I'd get the first flight out of here to New York immediately. You know, some people stay regardless, but I think that is a very poor choice, because at the end of the day, if something bad happens, you're going to call the first responders, and then they have to put their own lives in danger to go get you when they told you to evacuate. So here, I'll give you guys one more shot of the Bank of America Tower. Hey, Smooth and Silky says people didn't return to work once they saw they could work from home, created their own business and continued to work from home. Yeah, Smooth and Silky, there has been definitely an increase in entrepreneurship, people doing gig economy, such as Unlimited Stimulus said. So I think you're right. I think you're right. Leonard says the average salary for a pharmacist is $57 an hour, Pennsylvania. That's a good wage, man. That's a good wage. I know the job is grueling, but Hey, E is here. Says, hey Tom, good evening. What's up, E? Welcome. Somebody says, does Miami have a football team? Yes, we have the Miami Dolphins. I'm not a big football guy, but we do have the Miami Dolphins. Hey, Dan Zhang says, hey Tom, we have a special stream with you talking about how to... Dan Zhang says, hey Tom, can we have a special stream with you talking about how to get into tech sales industry and some tips to be successful and some of your stories on the job? Yes. So Dan, all of that is coming. So I'll give you, since it's Sunday night, we pretty much covered everything we needed to cover on the stream. So I'll give you guys a little bit of an insight of what I'm thinking about doing, especially with a couple of my friends. So me and a couple of my buddies that are either number one in enterprise tech sales. So a lot of my friends who've sold either telecom, either wireline, SD-WAN or something like that at the enterprise level, or just pure play software, enterprise software sales. And two of my investment banking buddies, we're thinking about creating a strategic recruitment company targeted towards placing top-tiered talent into the fastest growing SaaS startups. So long-term down the line, what we want to do is we want to be an investor in these particular companies because we have experience and expertise doing really well at selling this particular software and these products. So just from working in that space, we know which companies tend to be successful, tend to have a good product, which particular C-level executives, why they choose a particular product over another, what are their buying habits. So what we want to do is create an environment where we invest in these particular startups and then go out and search for top tier talent and place them into those particular jobs. So let's say if it's a cybersecurity company and it's like a SaaS-based cybersecurity company where it's a subscription service, what we can do is run a bunch of interviews, either funneling it through the channel or through the newsletter, and based upon the criteria of the people that we interview, we'll place them in these positions. And a lot of those positions will probably come with some sort of equity package or something like that. So that is coming probably within the next year. So stay tuned for that. Hey, Michael Stein says, I recruited for 30 years. So Michael Stein, since you recruited for 30 years, if you will, what was the number one or two factors that you looked for in a recruit? So if you were placing somebody into a tech company, or maybe you recruited for the investment banks, what were some of the characteristics that you looked for and that was most important to you? Hey, Deborah's here. Good to see you. So Dan, yeah, we're going to be doing some of that. I think I'm going to put out a dedicated newsletter. Maybe, everything you need to know to break into tech sales, things like that. So Michael says the right person as a person. Interesting. I like it. I'll take it. Hey, Sean says, good night, Tom and chat. Looks like another beautiful evening in Miami. Thank you. Hey, Cynthia Martinez. Good to see you. Thank you for joining, Cynthia. Charles D says you have to be technically strong and communicate well. Yeah, especially nowadays, here's what I would say. If you want to break into tech sales, obviously it depends on what you're selling, but you do need to have some sort of technical aspect, right? So let's say if you're selling an SD-WAN product, which is a software-defined wide area network, and you're helping companies transition from a traditional MPLS network which is multi-protocol label switching, over to a more software-defined WAN. You don't need to be a genius in this type of technology because obviously you can leverage your solutions engineers and things like that, but you need to know enough to be dangerous and to have a high-level conversation with an IT director, right? So I think it takes a very special kind of person to excel in tech sales, because not only do you need to have the communication skills, you need to be able to be very well put together and present well, you also need to have a technical side, but I wouldn't say you need to be a full-blown engineer. That's why usually if you are an account executive or enterprise account executive at a particular tech company, you'll usually have a solutions engineer that is assigned to your team to help you close those deals from an implementation standpoint, right? So if there's something that you don't know or a question pops up, you can tap your solutions engineer on the shoulder and have them sit in on the call with you and things like that. So that's a good point. So we have made it. We have made it to Brickell. But if you guys are enjoying the live stream so far, please feel free to hit the like button and subscribe to the channel if you are new. We usually do these live streams about 5 days a week between New York City and Miami. Michael Steins is the salesperson, sells, and the pre-sales engineer talks tech. Hey, Michael's like, I recruited sales and engineers for Cisco. Very nice. Awesome. DJ says, I work in sales ops. It's also a good career path. Michael Stein says, skills are second. Charles D says, you have to be technically strong and communicate well. Yeah, I think those are all very good points. I think the one thing that you need to realize too, if I could give you a piece of advice, usually the way the hierarchy works at a tech company in terms of a sales standpoint, you'll usually have like an SDR or a BDR, and those acronyms stand for Sales Development Representative and Business Development Representative. And they essentially provide the lead generation for the account executives, which close the deals. But if I could give you some advice, what you want to do is you want to totally skip over the SDR portion. If you can, if you think you're skilled enough, completely skip over the SDR and BDR and go right to the account executive position and try to be a closer. That's what I would say. Because the end goal of any account executive, you're probably going to be selling into small to medium-sized businesses, but as you improve as a salesperson, then you can move to mid-market account executive, which you're selling to, medium-sized businesses, maybe, lower enterprise. But the end goal is to sell to enterprise accounts, which could be Fortune 1000, Fortune 500, Fortune 50. That is the sort of segment that I'm in, but it's a completely different sale than selling into SMB. The buying cycles can sometimes take over a year. It's more of a complex sales cycle. So not only are you selling into IT, but you're selling into operations, you're selling to HR. So there's a lot of buy-in, there's multiple decision makers, and it's more of a complex type sale. So I think as you get your sales acumen up, as you increase your experience, you can move into enterprise sales, which pays very, very well. Goshi says, out of curiosity, have you ever thought about doing streams from another city? So we stream from New York City and Miami. Haven't really thought about doing streams from other cities. We usually just do this after work. Michael Stein says, I worked for several startups in insurance. So Michael Stein, what is your opinion on Lemonade, the company Lemonade? That is sort of, I guess you can still consider it a startup. I mean, they're publicly traded, but I know they're trying to revolutionize the insurance industry. They're not profitable. The financials are horrible. All right, so now we are in the heart of Brickell. Hey, Solos, is being a creative is one thing, selling a product is another. Good to see a Solo. I think these two buildings are my favorite here. Oh my gosh, we've already been streaming for 2 hours. So since we've already been streaming so long, everybody, we'll just do a quick rundown of the week ahead on Wall Street, and then we will wrap here. So obviously tomorrow, Monday, August 22nd, we will have Palo Alto Networks and Zoom reporting after the bell. We will also be hearing from the Federal Reserve Bank of Chicago as it releases its National Activity Index for July. Consensus estimate is for a negative 0.14 reading, slightly better than in June. I wonder what this place is. Is this a hotel or is this only like a restaurant? It kind of looks like a hotel, doesn't it? Anyway, Tuesday is the big day. We're going to talk about Toll Brothers. So Tuesday's live stream will be solely dedicated to Toll Brothers. Why? Because that will give us a deeper look on the health of the housing market on the higher end of the tier. As we heard from the National Association of Home Builders, about 20% of all new single-family home builders in Q2 had to lower prices to either save existing deals or close new deals. We will also be hearing from the Census Bureau that reports new sales data for new homes. So last week we had the existing home sales data. On Tuesday, we will have the new home sales data. And then Thursday is the big day, is when we start the Fed meeting in Jackson Hole, Wyoming. And Friday, hopefully on the stream, we will be covering live Fed Chair Jerome Powell's speech as he sets the tone on Wall Street for monetary policy. Will he come in dovish? Will he come in, I don't know. Now that I'm thinking about it, I think as this market is coming up against its 200-day moving average and is sort of declining here a little bit, I think Fed Chair Jerome Powell may try to come off as more data dependent, which would be dovish as opposed to hawkish. But we'll cover that here on the stream nevertheless. That I promise you. And of course, we have a bunch of other earnings mixed in. Dollar Tree, Dollar General. We talked about that almost ad nauseum today, obviously, because when Walmart reported earnings, they said they got a big boost in revenue due to clientele in the $150,000 household income range trading down, to use their terminology, to buy products and services at Walmart as opposed to Whole Foods and the like. So if customers that are making 150 grand are trading down to Walmart, my only thought is that the masses are probably even trading down even lower to buy things at Dollar General and Dollar Tree. So if I had to guess, I think Dollar Tree and Dollar General is going to rip some faces off, blow out earnings, and give pretty good forward guidance. But I guess we'll have to see. We'll have to find out. BC says have a great night. Thank you so much. The ABX girl, have a great night. If you guys enjoyed the live stream tonight, please feel free to leave a like on the video and subscribe to the channel if you are new. If you want to sign up for our free financial newsletter, scan the QR code, punch in your email, and you will receive a free financial newsletter where we talk about not only the US equity market, but emerging markets, fixed income, housing market, and the like. I want to wish everybody a fantastic week ahead. Never quit. Hopefully you guys had a good weekend and you are well rested to attack the week coming up. So I want to thank all of our moderators. Thank you so much. Dusty Cole, Gary Carpenter, Western Mass Dave, Sabrina Fair, British Gray, Joan, Bob, and to the Mighty Bull. Have a good night wherever you are, because there is always a bull market somewhere and you just need to know where to look. We will be live tomorrow, 8:30 Eastern Time. Potentially you guys will be able to get to see the WeWork. That is to be determined. But everybody, enjoy your week. Make sure you're productive. Stay positive. Keep your head held high. And we will see you right back here tomorrow. Have a good one.